Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, I'm going to be doing some brief technical analysis on some of the top Bitcoin mining stocks. So let's get into it. Since they are stocks, we have to take a look at CNN, fear and greed. And as far as that goes, we are still down into neutral as far as crypto because these miners have acted more like altcoins in prior cycles in the ways that they can move and multiply their value right before and into the alt season, that we have to pay attention to crypto fear and greed as well. And you'll see we're still high up in greed. And I think this is a good thing, at least for the near term, as far as the possibility of maybe there being one of the peaks in this cycle coming soon. You'll notice that when we get these mid-cycle tops, it's usually just a spike, but when greed is able to stay up higher for longer, in the past that has tended to bode well for crypto. This is when we were staying up higher for longer in greed. The mid-cycle tops, those peaks were here and here. Let's get into the Bitcoin dominance chart, something to pay attention to. What we are waiting for, at least what's happened the last two cycles, is when Bitcoin dominance is rotated down, and that means the overall percentage of money in crypto that's in Bitcoin, when that is rotated out of Bitcoin into altcoins, into miners, that is when we can see the value of these altcoins and miners explode. And as far as alt season, we are still just making higher lows. We haven't hit the macro alt season yet, as shown on this chart. This is what happened in the last cycle in 2021. Of course, if you're interested in hearing more about crypto cycles, I talk about the rainbow chart, other indicators every week. Subscribe to hear more about that. But we're going to get into some miners here shortly. I think I'll talk about the ones that you all request the most, or at least comment on the most. We'll talk about Mara, Riot, CleanSpark, Wolf, and Cypher. We'll talk about those five in other videos. Sometimes I run through a bit more of them. Let's get into Bitcoin first. Still in this ascending channel. Hit the top of it, is coming back down. You see we have a doji. I think the markets are sort of anticipating what might happen with the Fed rate cuts today. The Fed more than likely going to cut by 25 basis points. In the past, when the Fed has then paused and even raised rates a little, in the 1998 bubble, that's when the true euphoric blow off top happened. But something right here to note is this trend line. That is the 1618 fib on our chart here. So you see the fib goes from the high to the low. We have it off log, the 1618 fib. Sorry about that. We have to scroll down here. It's being touchy. Is right there at 102K. That is now acting as support. And you can also see the double top line is going up there too. That could be in the more short term. If things did get somewhat bearish, this double top trend line could turn into support as well if we broke under the 1618. But as far as we're concerned right now, we are having daily candle bodies above it. So I would like to see the 20-day moving average as well as 1618 show support there. As far as Bitcoin dominance, as I told you, when we have that big rotation from Bitcoin into alts, we get this drop. This is alt season. It only lasts about a month, give or take. Right now, we've had a little drop. There is this buy signal on the weekly. Hopefully, we're just making a short move up before going further down. As far as this big move down, what I did like about it is that the 20-week moving averages, you can see how they acted as support. That was broken as support. Now we want to see it act as resistance, right? Now it's still underneath there. Going over to the daily, hopefully we see the 50 and the 100-day moving average hold resistance, and then we go further down. And then this would mean we're seeing somewhat of a bearish flag pattern. Let's get into the mining stocks, because if what I just said does play out, then it's possible maybe there's some deals out there. So let's take a look. As far as Marathon Digital Holdings, you can see we are in this massive wedge going down. This all the way from the prior all-time highs here, that we have these peaks. It had a little bit of a fake out, and it's underneath that descending trend line. You can see it does have a daily sell signal, But right now it's at the 618. If you dollar cost average in here, I don't hate it. But if you were able to be patient and possibly get any value here close to the $16 level, you can see 16 to 20-ish is really good discount territory. Right now, again, if you love Mara, wouldn't blame you for dollar cost averaging in here. Nothing I say is financial advice. But if it was able to come down in this area, I think that would be better for the short term if we did have some minor bearishness. Although Santa Claus rally, that's something we have yet to see if it does play out. If Mara does start to move up out of this wedge in a big way, the next target is almost double. That's about $41. Next, let's go over to Riot Platforms. And Riot, we are still in this descending channel. You can see that the 200-week moving average, we had this big doji on it, and now it's acting as support, although we do have these wicks above, so there is some sell pressure in the upper end of this channel, close to that 0.5 fib. So we want to see Riot change trends here from this channel. You could call it bull flag, whatever, but we want to see it get above this 0.5 at about $16, even get to the 618, close to 23. Otherwise, it is possible it just hits the upper end of this channel. If there was bearishness, it could come down to this $11 area. That's where I begin to look at possible dollar cost average opportunity. And you can see even last week, those that fib, the 382 at $11, it was getting sniped here. So unless you had a buy order or just happened to be logging on your Robinhood account at the right time, hard to get these, but that's why we draw fibs, so you can look for those levels in the moving averages too. So people were snipe buying these $11 ranges here on Riot. Next we got, let's do CleanSpark, Wolf, and Cypher. So CleanSpark first, CLSK, and what do we got for CleanSpark? So CleanSpark did have that weekly sell signal. We were talking about this. I do like how it's at this fib and moving average support. We also have this ascending trend line down here. So this whole area to me is good discount territory between $10-ish to $13 in there. I don't hate any of these prices for dollar cost averaging. If it does get under this trend line and settles at the 0.5 at around the high $8, low $9, I think that's even better discount. So again, if you were excited that CleanSpark got to this area at about $13 and you said, you know what, I'll buy some here. If you like the price here, then you should love buying it here. Do not get dismayed if it goes lower. That is the mindset of a market psychologist, in my opinion. If I'm buying CleanSpark here a little bit, I want to love buying more of it down here. Otherwise, if not, you should never buy it in the first place if that's not your mentality. So again, part of my philosophy here as a market psychologist is just checking the charts, whether it's once a week, every other week, even a month, and waiting for those discounts, being patient, letting the market come to you, not chasing the FOMO and the hype. So right there, we'll see that maybe these supports, this trend line, or the moving averages can hold as support in this trend line, and then possibly see another move up. We do want to see it. You can see how the 786 has acted as resistance in the past. So we do want to see CleanSpark get to that 76 and move past it. Next, let's go to Wolf. We'll do Wolf and Cypher. So Wolf, I was talking about this, how it's curious that the higher lows are moving up in an ascending trend, and even the higher highs are moving up in an ascending trend. I wonder if this is getting ready to blast off, and it's sort of coincided with this positive cross here, the 50 above the 100. The 50's coming up to the 200 week moving average as well. So golden cross time. It is possible you see a weekly buy signal on Wolf that if this does get bullish, we're looking at $17 and maybe even former all-time highs there. So do keep an eye out on Wolf. I know my drawings here are pretty horrible, but it does look like this thing's just slowly and then faster and faster getting ready to possibly shoot off in sort of this, I don't even know what you would call that, a parabola or whatever. Just someone in the comments let me know what would this shape pattern be. But Wolf, if it isn't able to get above the 786, 8817, at least turn that into support, then we have all these moving averages in the 618 fib here at around $5. So that would be the beginning of in my opinion, of discount DCA territory again. Of course, other fibs below, but I'd say $5 most likely. And then lastly, let's take a look at Cypher. And if there's any other mining stocks that you would like for me to take a look at that are on this chart in the future, ones that you have money into, just comment below. I'd be happy to take a look at it. A little crunch for time, but I wanted to hit at least the main ones that y'all like. So Cypher in this ascending channel, we're still waiting to break up and out of that ascending channel, which you can see that channel runs into the 888 fib at around 10 bucks. That could be resistance right now. It even has resistance at the 786. So you can see there's this dashed line, even it's pretty close to it. There's this definite through line, and we'll see what happens. Going to finally start closing above the 786. I think if some of the narratives turn positive, Santa Claus rally, the Fed, all that stuff might give enough of an excuse for these markets to pump. But again, we want to see it break out of this channel, break fib supports in order to say we are getting into alt season bullish time. But right now it's just slowly grinding up, and I love to see it. If it did come back down where these moving averages are around $5 to the high $3, so the mid $3 to $5, that's your dollar cost averaging territory, anywhere under 5 basically. So anyways, let me know what you think in the comments below, and have a wonderful Wednesday. Take care.